If you think the war in Iran is too far away to have an impact on you directly, think again. I'm an economist and I'm about to break down exactly what is happening in the market as a result of the war in Iran and how it will impact you very soon, if it hasn't done so already. The ongoing war has led to a disruption at the Strait of Hormuz, which is a big problem because 20% of the world's oil supply passes through that strait. That disruption directly equates to having less oil for the people who want to consume it, thereby leading to an increase in prices. Now, if oil is more expensive, obviously you're going to feel it at the gas station. However, that's not where it ends. Higher oil prices also mean the goods you literally consume on a daily basis now cost you more, as well as having ripple effects on the stock market. Higher oil prices also mean everyday goods now start to cost you more. And that is because oil impacts everything. A lot of the goods you consume actually travel to you from all the way around the world, and that requires oil. So if oil is more expensive, it costs more to ship goods towards their final destination, and that is reflected in the final prices you pay towards those products. If this war continues, expect inflation rates to go up significantly starting next month, and you will definitely feel the impact on your wallets the next time you go shopping. Next, let's talk about the stock market. The Canadian stock market, for instance, has been down for the last few weeks. Most of this impact is coming from oil. As explained in the previous point, because oil impacts everything, it directly shows up in the stock market. If you're wondering why that's the case, let me explain. Investors like stability and predictability. Conflict such as that in Iran or the Middle East in general means there is considerable instability, which impacts business. This impact on businesses is captured by the overall decline that we see in the stock markets. However, it's crucial to note here that while there has been a decline in the stock market hasn't nosedived, meaning the decline isn't huge enough to be disruptive. And what does that say about investors? It tells us that investors think that even though this war is disruptive, it is temporary. And since the war is considered to be temporary, investors are for the most part holding on to their investments and seeing how things play out. However, the situation, as we know, is continuously evolving. If the war continues, we're likely to see even higher stock prices, higher inflation, and maybe more pronounced effects on the stock market. So what should you do if you have money invested in the stock market? How should you proceed in such a time? I'll be covering that in my next video, so please like and subscribe and hit the notification bell to be notified when I upload my next video. Until then, stay safe and have a good day.